And we are live. Good evening, everyone. Today, the market sold off again, but it wasn't as bad as the previous days because the good old Federal Reserve Chairman Jerome Powell stepped in and basically said that he's analyzing and watching the markets, and he's basically ready to jump in and print some money, is basically what he said. I'm paraphrasing right there. The Dow is down more than 4% 4,000 points from its high. The S&P is down more than 11%. As I predicted on a Friday, no trader and no investor is going to want to add to any positions or be long, not knowing what's going to transpire and happen over the weekend with this virus. Are we going to see a spike in cases? Are we going to see new confirmed cases here in the U.S. that's not linked to China? And everything across the board sold off today. I don't care if you were in precious metals, oil, regular stocks, crypto, literally everything sold off today. And I think a majority of the selling in the precious metal space was really just a lot of people having to raise some collateral because there probably was margin calls because of all of the selling that was happening in stocks. And what happens is that if you are making money in one position and you're losing money in another position, a lot of the big funds, what they'll do is they'll liquidate some of their winning positions to raise some cash so that in the event that they want to step into the market on Monday or Tuesday, they'll have some money to do so. We also have our second confirmed case here in California where this individual has been infected through the community, and she's not linked to anyone that has recently traveled to China or have came back from China. So that's extremely important. So with that being said, let's look at the market and let's see what's going on. Right now, we can see Bitcoin's trading at $8,684. It's down about 1%. ETH is down about 0.7%. So overall, the crypto market's fairly quiet. It's not really up. It's not really down, which, it's not a good or bad thing. Just pretty flat for the most part. If we look at the broad indices, we can see the S&P 500. It was literally the market was tanking. And then as soon as Jerome Powell made that statement, and we're going to get to that statement, he basically reassured the market and the market went back up. And this is why you want to own gold and silver and crypto, because we've seen this playbook time and time again, guys. The Fed is going to step into the markets. They're going to blow the bubble. The bubble's going to get big. The real estate bubble's going to get big. The stock market bubble's going to get big. The bond market bubble's going to get big. And then something's going to happen. And then the market's going to begin to crash. And the Fed's going to step in again with all of these different programs, whether it's ZERP, whether it's quantitative easing 1, 2, 3, whether it's going into the repo market, et cetera, et cetera, et cetera. And we're going to cover that. So I don't panic when I see Bitcoin pull back 10 or 15%. And I don't panic when I see gold and silver pulling back like it did today, because I know we have over 100 years now of Fed policy. We know what they're going to do. They're going to inflate the money supply or come up with some scheme to get the ball rolling. So the Nasdaq came back as soon as Jerome Powell spoke. The S&P came back as soon as Jerome Powell spoke. The Dow was down 357 points. At one point, it was down almost like 800 points, close to 900 points at the lows of the session. The Nikkei is down 800 points, 805 points. The DAX, 477. And the FTSE was 215 points. So let's look at the S&P so you can see it for the day. So as you can see, immediately, as soon as Powell started speaking and put out that statement, the market just turned right back around and popped right back up. So you can see that this market is addicted to the Fed and cheap money. It has nothing to do with Trump. It has nothing to do with Trump's economy. And we're definitely going to get into that in a second. But you can see, as I said yesterday, right here, we were in October. The market slowly grinded its way up all the way from 3,040 up to about 3,400. And then within a matter of 6 days, just wiped out all of the gains. And immediately the Fed comes in and reassures the market that they're watching this, they're monitoring this, and they're willing to step in and help if need be. And that basically reassured the markets. As we can see here, crude oil, this is just a bloodbath. Crude oil is getting hit hard. It's down well over 15%, so that's major. And basically, they're just saying that if China has a sustained slowdown or they see another spike in cases, people are not going to be consuming goods and services. They're not going to be traveling, and it's just going to be a damper on the economy. And if we see spread here in the States, it's definitely going to hinder the economy. And we can look at gold real quick. You can see, look at this. Gold just sold off. Boom. And as I said earlier, much of the gold sell-off was just due to, I believe, people being margin called and having to raise collateral. And many people have probably in gold, and this is probably one of their winning positions, and they just have to get out. Excuse me. And we can see Bitcoin's just been moving sideways for the past few days. We pulled back from 10,500 down into this 8,600 area, and I'm looking for Bitcoin to push back up. So I'm looking to see us do this right here. Is what I'm looking to see. I'm looking for this pullback right here and then a sustained up move, because there's just no reason why crypto would be selling off. So with that being said, guys, now let's get to the information. So it says virus could disrupt U.S. schools, transportation, Mulvaney, 9:08 a.m. here in New York. So I'm basically going to give you the timeline for the day. We know what's happening with the CDC and the testing kits. That sparked the sell-off yesterday because the governor came out and basically said that they only have 200 kits to test people for over 40 million residents. And as soon as the market heard that, they said, well, that's the reason why the Trump administration is saying cases are low, because they don't have enough of the equipment the testing kits to properly go out here and test people. So we definitely know that there's going to be more confirmed cases here in the States. We have our second confirmed case here in the States, and I'll get to that in a second. It says acting White House Chief of Staff Mike Mulvaney acknowledged that the coronavirus is likely to cause disruptions to everyday life, such as school closures and changes to public transportation. Are you going to see some schools shut down? Probably. Maybe see impacts on public transportation? Sure. But we do this. We know how to handle this, Mulvaney said at the Conservative Political Action Conference outside of Washington on Friday. I want you to think about this. If you start seeing schools being shut down, what are parents going to do? See, you have to really start thinking about the broader implications about this economically. And especially if this is going to be like a cascade of waves where you start to see a spike in infections and then you see a pullback, sort of like a chart. Like what if we start to see cases where we see a spike in cases, then we quarantine people, we take out the measures, we see a pullback in cases, and then boom, we see another spike in cases. You know, you have to really start thinking about that's what we can potentially see. So if parents have to stay at home with their children, then they're not going to be able to work, which is going to cause a damper on the economy. And we're going to get to that in a second. Also, let's look at the update on the stats. Give me 1 second. My throat is a little something. Drink some water. So we have, as of today, globally right now, we have 85,212 cases. Total deaths, we have 2,923. And it says that we have 39,468 total recovered. Again, I say this during every stream. I don't trust any of these numbers that are coming out of China. We know that it's a communist country, but we can see that there's a jump in cases in Iran. There's 388 cases. In Italy, look at this jump. We was just at 600 the other day, and now Italy is saying that they have 889 confirmed cases. And in mainland China, they're saying they have 79,251. So we can definitely see that. I mean, it's beginning to flatline and level off, but that's if you trust these numbers, and I just don't. So then this was at 9:22 in the morning. It says the Fed's Bullard says rate cuts possible. Federal Reserve Bank of St. Louis President James Bullard said he would back interest rate reduction if the coronavirus develops into a worldwide pandemic, but last year's cuts are already supporting the economy. Further policy rate cuts are a possibility if a global pandemic actually develops, with health effects approaching the scale of ordinary influenza. But this is not the baseline case at this time. Again, basically saying they're going to print some money. And this is why you want to own precious metals and you want to own crypto. Also, Italy may suspend some mortgage payments. Remember when I was talking about you get into this deflationary cycle where if people aren't able to go to work, and corporations and factories have to shut down, that means that it's going to hurt their bottom line. Well, if people aren't making money or corporations aren't making money and they have to lay people off, well, people aren't going to be able to pay their mortgages. They're not going to be able to pay their bills. So when we live in this highly leveraged economy in society, if you see 30 days, 60 days, 90 days, and people can't pay their bills, what does that do to the banking sector that's creating money out of thin air? It creates this feedback loop where now people get laid off, people stop spending, businesses stop making money, and it just keeps the cycle going on and on and on. So we know what the Fed is going to have to do. They're going to do what they always do: step in and print money. Print money. That's what they're going to do, baby. It says Italy may suspend some mortgage payments. Italy, the epicenter of the outbreak in Europe, is expected to approve emergency measures, including spending payments of utility bills, suspending payments of utility bills and some mortgage payments to support companies and families in the areas most affected by the coronavirus outbreak. According to a draft of a measure seen by Bloomberg, small and medium-sized businesses in affected areas will have preferential access to a state relief fund, according to the draft. So, guys, I predicted this, and we're going to start to see more of this, more and more of this happening, because the work in a fiat-based economy, right? In a debt-based economy, one of the worst things that Keynesians, they hate is deflation, because deflation, it spirals out of control. They want to create more inflation, which is why you have to own assets that appreciate faster than the rate of inflation, because they're basically telling you that they need inflation. They need you to go into debt. That's why they want to cut rates. What would a rate cut do in this type of environment, right? This has nothing to do with monetary policy, right? This is something that's outside of the Fed, but the Fed wants cheap money. He wants Americans to go into debt. Jerome Powell and the powers that be, and we'll get to that in a second. So it says the CDC plans surveillance in 6 cities next week. In an effort to broaden surveillance for the coronavirus, the U.S. Centers for Disease Control and Prevention aims to have 6 U.S. cities running tests on individuals with flu-like symptoms next week. It's an effort to broaden monitoring beyond those already identified as at risk, such as travelers from China. The move comes after California identified the first possible case of the virus in a patient with no apparent link to international travel or other cases. For them to even be doing this, that's telling me that they believe that there's more cases out here. So again, I'm just updating you for the day. Again, more people canceling events, people canceling travel, people having to stay at home with their children. Now we're seeing Google cancel conferences in Las Vegas. Again, this is going to have a broad impact on the economy, and we can definitely see us going into recession in the second half. If this lingers on for another 30, 60, 90 days, I can definitely see us going into a recession. It says Google canceled a major internal gathering, the latest in the wave of events and conferences being called off around the world. The sales and marketing event was set to take place in Las Vegas in March. A Google spokesman said, in light of the evolving coronavirus situation, we made the decision to cancel an internal event that would have brought thousands of employees together from across 2 continents, the spokesman said. So you're going to start to see more and more of this happening over and over again. And then let's get to the big stuff, right? So it says California had its second case of coronavirus infection from an unknown origin. The U.S. raised its travel advisory for Italy, the epicenter of the outbreak in Europe. Federal Reserve Chairman Jerome Powell said the U.S. Central Bank is prepared to cut rates. What did I say going back on Wednesday? When you seen San Francisco declare a state of emergency, I knew right then and there that there's more going on than what they're telling you. And then when the news came out that they only had 200 testing kits, that is telling me that there's a lot of people who are going into the emergency room with flu-like symptoms and they're being sent back home. They're being treated with an IV bag, they're giving some basic medication, and they're being sent home, thinking that it's just the flu. So there's people all over the U.S. right now that could potentially be infected with this virus, thinking it's the flu because we're in the middle of flu season, and passing it around. So this is definitely something that you need to be paying attention to. Now, we do know that this virus can live on the surface of your desk. It can live on your couch. It can live in your car. which is why you need to be carrying Lysol wipes, which is why you need to make sure that you're washing your hands properly and just not being, I'm not trying to get you to be scared. I'm trying to get you to become informed. With that being said, now let's get over here. So it says Powell opens door to rate cut on evolving risks from the virus. Now we're going to get to the good stuff. What's going to happen with the economy? This is why you want to own gold and silver. This is why you want to be involved in precious mining metal stocks where you're going to get dividends, because we know this playbook. It says Federal Reserve Chairman Jerome Powell said the coronavirus poses evolving risks to the U.S. economy and signaled the central bank is prepared to cut rates if necessary to sustain the country's longest ever expansion. The rare statement issued Friday by Powell before the financial markets closed for U.S. weekend came as stocks posted their 7th straight daily loss, a slump which earlier prompted a string of Wall Street banks to predict the Fed would start reducing rates at its meeting next month, if not sooner. What that tells me is that these banks are in trouble. They're watching this and they're basically signaling to the Fed like, hey, it's time for you to start, we need some more QE. We need you to come into the repo market. They're basically doing a wink, wink, nod, nod. Things are getting a little hectic over here. We're in some trouble. Now, understand, Trump's entire re-election is based off the stock market. And this is why, if you go back to my videos where I broke down how Trump's economy isn't thriving, Trump's entire re-election bid is going to be your 401k and how well the stock market is doing. Well, look at this. Within a matter of 6 days, 12% of your gains wiped out just like that. Just like that. 12% of your gains wiped out. So that's why I constantly stress to you guys, the stock market doesn't indicate that your economy is doing well. Because we know most of this is just through money printing and debt monetization. And we know most of this is through QE and the Fed increasing this balance sheet. And don't worry, I know a lot of you guys, you don't understand this type of stuff. I'm going to cover that in a second, but just follow me. When you hear me say injections, that's money printing. When you hear me say debt monetization, that's the Fed printing money out of thin air. When you hear me talking about ZERP, that's the Fed printing money out of thin air. Anytime the Fed says that they're going to intervene in the market, that means they're printing money out of thin air that doesn't exist. When the Fed lowers interest rates, what that simply means is that they want to spur more inflation because they feel that inflation is too low, and they want more Americans maxing out their credit cards, buying cars that they cannot afford, and going into debt and buying homes that are overvalued. That's exactly what they want. Nothing more, nothing less. So when I hear these Candace Owen types and the Anthony Brian Logans and the, what's the other guy, King Face, and all these people talking about the economy, guys, your stock market gains can be wiped out in a week. The Dow is down 4,000 points in a week. Boom, just like that, over. And now Trump, who was calling the market a bubble, now he's signaling he wants the Fed to cut interest rates again. Oh, wow, why is that? It says, the missive recalls previous instances where the Fed changed course or had to address a budding crisis. The Fed cut rates at its meetings in July, September, and October, but has since been on hold and indicated it planned to be so long as there was no material change to the outlook. The virus may now deliver such a shift in the economy amid mounting concern. It's already hurt the Chinese economy and now threatens to damage supply chains, demand, tourism, and trade everywhere. Understand the stock market doesn't benefit everyday Americans. The stock market benefits the 1%. The stock market benefits the elite. So when the Fed does this, all they're doing is further increasing income inequality. And that's what I want to get to right now. This is the good part. This is the stuff that you need to make sure that you are paying attention to, right? Now, this right here, see, when I make these videos, I don't guess. I don't come up here and try to tell you something that I think may be happening. I don't try to pretend as if I'm some expert, right? I read to you the stuff that's actually just on the Fed's website, right? This right here says the federalreserve.gov monetary policy site. And this is the Board of Governors of the Federal Reserve System, right? So I'm not telling you something that I'm just making up. I'm going to actually copy this, put it in the chat for you to go and look at, because this is why you want to own precious metals. This is why you need to be paying. This is what drives income inequality, because when the Fed intervenes in the market, this money doesn't make it into the real economy. This money stays in the financial economy. Well, we know that's where all of the financial elites are at. So right here, so we can read this together. Let me zoom in a little bit so we can understand, and this will all make sense to you in a second. It says, the Federal Reserve's balance sheet has expanded and contracted over time. During 2007 and 2008 financial crisis, the subsequent recession, total assets increased significantly from $870 billion in August of 2007 to $4.5 trillion in early 2015, then reflecting the FOMC's balance sheet normalization program that took place between October 2017 and August 2019. Total assets declined under 3.8 trillion. Beginning in September 2019, total assets started to increase. See, whether you believe that this is real or fake, it's going to have a real impact on you. Like I see some of you guys in the chat right now, and you're saying, well, this is fake, right? Or this isn't real. It doesn't matter if it's real or fake. It doesn't matter what conspiracy theory you believe. This is going to affect you economically. This is going to affect you financially. This has major implications on your financial well-being. So now you can sit up here and you could be a conspiracy theorist, or you could be a person to start paying attention to yourself and saying, they went from $870 billion in 2007 to $4.5 trillion. That means that the Fed is forcing people out of bonds and treasuries and forcing them into the stock market. So when you see this stock market being propped up, it's being propped up by Fed policy, by monetary policy. And I'm going to show you that how that's done in a second. Because when they start buying certain securities, they're pushing the yield down. So people who need yield, you people who are retirees, who are investing in your pension funds, investing in T-bills, they're forcing you now into the stock market. So now you're going out of safe assets into risky assets. And then now your pension plan is sitting here in the S&P. Right? So you work 40 years of your life, and you have one of those pension plans, especially one of those defined benefit pension plans, your money's getting wiped out. And then even if the market goes up, you're getting hurt through inflation. So it's a double-edged sword. You're damned if you do, you're damned if you don't, which is why I like to be outside of the financial system. Now, I want to show you something. If you go back here and you look at this date, right? This is September 2018. Soon as the Fed started doing quantitative tightening, basically trying to unwind their balance sheet, I'm going to show you on the actual Fed's website what happened. When they start unwinding, the market began to start to sell off. Quickly started to sell off. And we can see that right here if we go to the Fed's balance sheet. 1 second. Right here, if you go in here, just July, this is in September. Right here, as soon as they started reducing the balance sheet, getting rid of the stuff, as soon as they start doing this, notice the market followed right behind them. As soon as they did that, the market started selling off. I know you're probably saying, so what does that mean? What that means is the Fed can never reduce its balance sheet, because the minute that they do, the market's going to crash. So when they print this money out of thin air, they have to keep doing it. In order for the stock market to keep going up, the Fed has to keep printing money. That's it. You don't have to have a PhD in finance. You don't have to have a PhD in economics to see this. The Fed has to keep printing money to keep the bubble going. That's it. There's nothing more that you have to think of. Now, I get it. Some of you guys are poor. Well, then you have no business paying attention to gold and silver and all that type of stuff. This is for people, if you have a pension, If you have a 401k, if you have money in the markets, if you have real estate, you need to be paying attention to this because it's in your face. Understanding the Federal Reserve's balance sheet. This is free information that you can go and find. Right? I'll just read it to you. Taking a look at the balance sheet of the Federal Reserve, or for that matter, any central bank, is like seeing the eighth wonder of the world. Unlike any other business enterprise, the Fed can expand its balance sheet by printing as many dollar bills as it wants. It's like creating wins merely by waving your hands. But there are many practical limitations, and printing more money may not be always good for the economy. In this article, we take you through the nooks and crannies of the Fed's balance sheet so that you are able to navigate through it without getting bewildered. This is what is known as the boom and bust cycle. So when you see the Fed saying, hey, we want to cut rates, what they're saying is that, hey, we want to cut rates so that banks theoretically can loan more money to Americans and get you into more debt. But we know what happens when the banks get this money. We watched it happen in 2008, right? When the banks get lower interest rates, instead of them going out and loaning money to you and I so that we can go and do things in the economy, instead what the banks do when the Fed lowers interest rates is they take the money now that they could speculate on, or QE, right? So when the Fed does QE, and I'm going to show you that in a second, where they basically buy the treasuries back from these dealing desks, they take the money and go speculate in the stock market. So essentially, when the Fed does QE and buys the bonds back, they take the cash and they go prop up stocks, and it further blows the bubble. And they give you, instead of giving you a loan with lower interest rates, they loan the money to their friends. And I'm going to show you that in a second, but I want to show you a chart because you always see me talk about this, right? I constantly always speak about this. I know you probably can't see this, but I always tell you that there is, give me 1 second. I'm trying to center this. 1 second. Gotta center this. There is $74 trillion worth of debt in the system. $74 trillion of debt in the system. The M2, it says the M2 money stock, it's less than $1.6 trillion of actual cash in the system. This is what gives money value because you're in debt in dollars. So guess what you have to do to pay your mortgage? You have to earn more dollars. Guess what you have to do to pay your credit card? You have to earn more dollars. So now what they're saying is that they want to lower rates to stimulate the economy. Their idea of stimulating the economy, they're saying $73 trillion isn't enough debt. This blue line is the total amount of debt in the system. Do you see how much debt is in the system and how it keeps growing? So when they say they're going to cut rates, how does that benefit you? It doesn't. It doesn't benefit you. What it does is it keeps the bubble going, but who owns most of the stocks? Who owns most of the stock market? Who owns most of the real estate? And see, we can see that with the velocity of money. This blue line right here represents how the money actually flows through the economy. Look at the blue line. Look how it constantly goes down and down and down. But look at the money supply. It just goes up, 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 up. Right? So the money supply is going up, but the money's not flowing through the economy. Why is that? Because of wealth calcification, because of income inequality, because we know rich people don't spend money. We know rich people hoard money. Rich people, most of the wealth is here. Jeff Bezos reportedly dropped $165 million on a Beverly Hills mansion. Here's a look at his lavish properties across the U.S. So most of the money It just stays at the top. It doesn't flow through the economy. So what good is it to have low interest rates if the banks aren't going to loan money to you and I? All they do is give us credit cards with 22% interest. Or they give us auto loans. Or they give you student loans. So when the Fed talks about stimulating the economy, all they're talking about doing is blowing this bubble bigger. And the bubbles don't benefit you and I. Because when the crash happens and the banks have to get bailed out, who bails them out? We do, the taxpayer, or we bail them out through inflation. And I'm going to show you that in a second. But this is where the wealth sits at. So when you look at this chart and you look at the velocity of money and you see it's dropping dramatically, all of this money is stuck in the banking system. All of this money is stuck in the stock market. All of this money is stuck in high-end real estate. It's stuck at the top. It's not it doesn't come to us. So we don't get none of the benefits of the boom. We just get all of the bust. Doom. And I want to show you that. So give me 1 second. I want to flip something over to you, right? Because I know a lot of you're probably like, I get what you're saying, but I don't really get it. So what I want to do is I want to highlight this for you. And again, yes, it's more technical than this. Obviously, it's not as simple as this. I like to give you information in a way that you can understand it. I don't want to sit up here and throw a whole bunch of fancy terminology at you. That's not what this is about, right? This is about giving you a visual understanding of what's going on. It's up to you as an adult to go and do more research and get the deeper meaning as to what's going on, which is why I recommend books like The Creature from Jekyll Island, listening to people like Peter Schiff, Nouriel Roubini, real economists, people who actually can go into much more depth in this. This is to give you a brief overview. So over here, you have the Fed. This is the Fed right here, right? And you have the government. The Federal Reserve is not a government entity. It's a private bank. It's not a part of your government. And I've broken this down to you before, but I want to give it to you again. Right now, let's just keep the numbers simple. Let's say your government needs $500 million, right? That's what they need. They need $500 million. So they tell the Fed, hey, I need $500 million. The Fed says, sure, no problem. We'll give you $500 million at 3% interest. Okay, so the government creates T-bills. They send them over to the Fed. And the Fed sends them the $500 million that they need with interest. Now, think about this. If the Fed is creating the money, even if you pay back the $500 million, how do you pay back the interest? You can never pay back the interest. You have to borrow the interest into existence. That's the scam of the Federal Reserve System. Your government can never get out of debt because it's borrowing money from a private institution. So even if you pay back the loan, you could pay back the principal, but you can't pay back the interest. Now, what happens with these T-bills is that banks, the Fed has banks like Chase, JP Morgan, that are primary dealers. So what the Fed says is, hey, we're going to give you these T-bills that the government sent us. We're going to give the T-bills to you and let you sell them to investors. And this is what pension funds buy, right? Because it's backed by the full faith and credit of the United States government. So the Fed gives these T-bills to their primary dealer banks. But then the Fed said, hey, because a lot of you banks are in trouble and we want to spur lending, we're going to create an additional $500 million and we're going to just buy the T-bills back from you. So think about this. I know you're probably saying to yourself like, wow, this is crazy. What are you saying? The government needed $500 million. They got it from the Fed. The Fed gave them the $500 million with 3% interest. Even if your government paid back the principal, they could never pay back the interest. They have to borrow it into existence. Okay. The Fed gets the T-bills. They then give them out to their primary dealer brokers that go into the open market. And they sell it to Japan. They sell it to investors in Germany. They sell it to pension funds, et cetera, et cetera. Well, the Fed said, you know what? Because you're in trouble and we want to spur lending, we're going to create an additional $500 million out of thin air, and we're going to buy those T-bills back from you. This is what is known as them increasing their balance sheet. That's quantitative easing. Now, what do the banks do with this $500 million that they got from the Fed for these T-bills? So now the bank has, just erase that. Hold on, give me 1 second. So now the bank has $500 million. So think about this. Think about this for a second. That's $1 billion that was created out of thin air. That's in the economy. We're not even talking about fractional reserve lending right now. The government got its $500 million. The Fed said, hey, we want to grow the economy. We want people to loan money. We want people to go shopping. We want consumer spending. So they create an additional $500 million and give it to the banks. So now they're hoping that the banks take that $500 million and loan it out to start the economy. Well, the bank said, no. Why would we do that? We're going to loan money to our friends and we're going to speculate in the stock market. So this is how you get this bubble in the stock market. It has nothing to do with Trump's policies. This is all engineered by the Fed. All of this is engineered by the Fed, which is known as the boom and bust cycle. So it doesn't matter if it's home prices collapsing. It doesn't matter if it's a black swan event like an epidemic or a pandemic. You're going to keep having these boom and bust cycles because you have a Federal Reserve, a central bank that creates money out of thin air. And what happens is all of this money, as you can see, it just stays in the financial economy, but it never makes it into the real economy where you and I are at. And we can see it in the data. We don't have to pretend. We can see all of this money is staying in the top 1%'s hands. And it keeps getting bigger and bigger. Why? Because inflation keeps going up. And the inflation makes it into their hands. And we get the bad inflation. We get the higher prices, higher home prices. So someone said, oh, well, mortgage rates go down. What good is it if mortgage rates go down, but the price of your home goes up 20%? Right? Most millennials can't afford a home. They're tapped out. You don't make enough at your job to afford a down payment. You're deeply in debt. Your debt to income is thrown out. I'm glad you said that, Marquise Kid, because I'm about to talk about Ray Dalio right now. I guess great minds think alike. Right here, Ray Dalio broke this down so eloquently. The world has gone mad and the system is broken. I say these things because money is free for those who are creditworthy, because the investors who are giving it to them are willing to get back less than they give. More specifically, investors lending to those who are creditworthy will accept very low or negative interest rates and won't require having their principal paid back for the foreseeable future. They are doing this because they have an enormous amount of money to invest that has been and continues to be pushed on them by central banks that are buying financial assets in their futile attempts to push economic activity and inflation up. This is a billionaire that's saying this. The reason that this money that is being pushed on investors isn't pushing growth and inflation much higher is that the investors who are getting it want to invest it rather than spend it. Because what did I just say? Rich people hoard money. They don't spend money. They don't spend the money. Instead, what they do, they go buy a $165 million Beverly Hills mansion here in New York City, where I live at. There's a place called Billionaires Row. And listen, guys, I'm not one of these social justice warriors. I'm not a person that, oh, damn, I got to flip the screen. Sorry about that, guys. I was reading this right here. I keep doing that over and over. I have to get used to using the iPad. I'm not used to using the iPad yet. And streaming, I always forget to do that. So yeah, when he was talking about money, it doesn't make it into the economy. Jeff Bezos reportedly dropped $165 million on a Beverly Hills mansion. Here's a look at his lavish properties across the U.S. So not only does he not have one, he has multiple. There's multiple places to cross. Let's see if they have pictures of it. Here we go. In June of 2019, 2 months after the couple announced their divorce, the Amazon CEO reportedly dropped about $80 million on 3 adjacent New York City apartments. This is what happens. Money doesn't flow. And you can see it, especially if you live in the hood, you can see money doesn't really flow in the economy as it's supposed to. Here right now in New York City, it's a place called Billionaires Row. This is where all of the billionaires live at. 53rd West, 53rd Street, 111 West 57th Street, Steinway Tower. This is where this is known as Billionaires Row. Because the money doesn't flow through the economy. So when the Fed comes up with these different monetary tricks, soon as the stock market begins to crash, what do they have to do? They have to cut rates. They have to do QE. They have to figure out a way to get people into risky assets. Boom and bust. So the wealthy, they get all of the benefit of the inflation, but we don't get the benefit of it. We get the higher prices. So even if interest rates come down on mortgages, what good does that really do you if you're deep in debt? Or you can't really get a mortgage? I want to read a little bit more what Ray Dalio had to say. And again, I'll put this in there. I'll put this in the chat again. Guys, go read this stuff. And this is why I buy gold and silver. Because you can look at this and you can see, let's just look at the debt. Look at the debt in the system, this blue line. It just goes up. It goes up. It goes up. It goes up. There's $74 trillion of debt in the system. $74 trillion of debt in the system. So how does cutting interest rates, what does that do? It doesn't benefit everyday Americans. Going into more debt doesn't benefit everyday Americans. It just doesn't. It says, the reason that this money that is being pushed on investors isn't pushing growth and inflation much higher is that the investors who are getting it want to invest it rather than spend it. This dynamic is creating a pushing on a string dynamic that has happened many times before in history, though not in our lifetimes, and was thoroughly explained in my book, Principles for Navigating Big Debt Crises. As a result of this dynamic, the prices of financial assets have gone way up and the future expected returns have gone way down, while economic growth and inflation remain sluggish. Those big price rises and resulting low expected returns are not just true for bonds, they are equally true for equities, private equity, venture capital. Through these assets, low expected returns are not as apparent as they are for bond investments because these equity-like investments don't have stated returns the way bonds do. It says, because investors have so much money to invest, and because of the past success stories of the stock and revolutionary technology companies doing so well, more companies than at any time since the dot-com bubble don't have to make profits or even have clear paths to making profits to sell their stock because they can instead sell their dreams to those investors who are flush with money and borrowing power. This is why. So when the crisis happens, what do you think the Fed's going to do? What can Jerome Powell do but keep the party going? The only tool that the Fed has is printing more money. That's the only tool, is printing money. I don't care if it's QE1, QE2, QE3. Doesn't matter what it is. It's not going to work. Now, I want to talk to you about gold and silver, right? Let's transition. There's 185 of you watching this, guys. Hit the like button. It helps the content rank in the search engines and it gets the information out to more people who need to see this information. Storing gold on the Titanic. When you talk about gold and silver, right? One of the problems with gold and silver is, where do you store it? How do you store it? And I've mentioned to a few of you that you can actually buy the GLD, which is an ETF, which is the paper version, because some of you don't want to actually hold the physical asset. Me personally, I like to hold my gold and silver. I don't believe in safety deposit boxes. I'm going to show you what's the problem with paper gold right now. This is the problem with paper gold. HSBC is the biggest bank. It is also the custodian for GLD, which means it buys and stores gold for the fund. Unbeknown to many GLD investors, HSBC has a history rife with scandals that include predatory lending, tax evasion, and even accusations that they lack of controls helped terrorist groups and drug traffickers. Their rap sheet is pretty long. So now this bank is basically bankrupt. Banking giant HSBC to cut 35,000 jobs amid restructuring. British bank HSBC announced plans Tuesday to cut 15% of its global workforce, some 35,000 jobs, and shed 100 billion in investments as it refocuses on growth markets in Asia. Interim CEO Noel Quinn says the world's seventh largest bank. This is the world's seventh largest bank. Had a resilient performance last year, but that parts of the business, including global banking and investment markets in Europe and the US, are not delivering acceptable returns. Do you want this bank holding your gold? See, this is what you have to think about. Do you want this bank holding your gold? They're technically bankrupt. This is known as counterparty risk. Because do you really think that they have enough gold to back the GLD? They're technically bankrupt. And this is the seventh largest bank in the world. They have to lay off 35,000 people. Now, how many people actually know that HSBC is the custodian of the GLD ETF? So think about if people actually had to make a claim on that gold that's supposed to be backing that ETF. I guarantee you HSBC doesn't have that gold. I guarantee you that they don't have enough gold to back up the GLD ETF. This is the investment opportunity that you have. I guarantee you they don't have enough to back it up, which is why I want to hold my gold. Because if you're holding a piece of paper, it's just a piece of paper. It's no better than holding a fiat dollar. This is fraud. When you understand they create money out of thin air, it's fraud. It's not complicated. You don't need a PhD. Don't let people try to use fancy terms to try to, it's more complicated than that. Whenever someone tries to complicate something, they are trying to confuse you. Let me get my Umar Johnson on again. Here we go. Whenever someone tries to make things complicated and add complexity, they are trying to confuse you. Quantitative easing is money printing. ZERP is money printing. Cutting interest rates so that banks can loan out money is money printing. And I'm glad that Mins Optera said this. There's nothing capitalistic about this. This is the kleptocracy. This is, if anything, I would say this is crony capitalism. These are big banks and big corporations working hand in hand together to defraud you. It's a banking cartel. And it's meant to keep people out. Now, someone said gold fell hard today. It should. Because, again, what's happening is a lot of these big funds are being liquidated because they're probably sustaining massive losses. A lot of them are probably over-leveraged Apple, over-leveraged Facebook, over-leveraged Amazon, Netflix, and Google. And what's happening now is they're probably getting a margin call. But a margin call means that you have to pledge more collateral in order to stay in your positions because they're probably down 15, 20% in certain stocks. So they have to raise more collateral in order to hold those positions. Now, obviously, if you're up in gold, you have to sell it. But see, again, guys, when I talk about crypto, when I talk about gold, we're talking about 3 to 5 years, right? I've been buying gold since we going back to 2011, 2010. I've been buying gold. You think I'm worried? You think I'm worried about this little pullback today? I've been investing from down in here. I don't care about the price of gold if where it goes. I've been long gold going back to here at 1200. I'm not worried about one day it's falling, right? Because I understand these principles, and I understand the only thing that the Fed can do is print more money. That's all they can do. If they don't print more money, we go into a depression. And that's the next video that I'm going to do and talk about the depression. That's all they can do. There's nothing more that the Fed can do but print money. And now look how low interest rates are. What's next? Negative interest rates? Now, someone said Trump and these Republicans trying to keep this market going. Of course, that's the only way they can win. That's the only way that Trump can win. But let me ask you a question. Here comes the double-edged sword. If Bernie Sanders wins, what is Bernie talking about? What is Bernie talking about? $1 trillion deficits, free health care, free tuition, free child care. That doesn't sound like balancing the budget to me. That sounds like more printing money, more spending. He's not talking about abolishing the Fed. He's not talking about having sound money. He's talking about printing more money, more spending. What do you think that's going to do to the value of the dollar? It's going to make the value of the dollar continue to fall. You don't have to be a rocket scientist to figure this out. You don't need a PhD in economics to figure this out at all. Right? And I'll pull it up and show you right now. I don't care what president you support. If you go back to 1971, not complicated at all. 1971. Now, I'm glad this person said modern monetary theory. Modern monetary theory makes no sense. Because if it made sense, an ounce of gold in 1971 was $35. You can buy 1 ounce of gold in 1971 for $35. Well, guess what happened? Today, gold is sitting at $1,584. So, if modern monetary theory worked, you wouldn't have seen that big of a difference between the price of gold in 1971 and 2020. Think about it. If I brought an ounce of gold for $35 in 1971 and I just held it, today it's worth $1,584. Can you tell me how modern monetary theory solves that in any way? Can you tell me how modern monetary theory fixes that in any way? Just you don't have to have a PhD in finance. You don't have to be the smartest person in the world. I don't need all of these different theories. You don't need to sit down and intellectually masturbate. Now, this is the inflation rate every single year. Right? 4%, 3%, 6%, 11%, 9%, 6%. Every year, this is your dollar losing purchasing power. Not complicated. I don't care if it's a Republican. I don't care if it's a Democrat. From 1971, we've had multiple presidents from different sides of the aisle, and we get the same thing. Inflation, 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 inflation. Why? Because it's not about the policy. It's not about who's in office. It's about the system. The system is flawed. The central banking system is flawed. You don't have to be, you don't have to be, one of these people who you can break all this information down. It's not complicated. It's not complicated. It's in your face. Inflation, 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 inflation. I don't need to debate. Like somebody said, I want to debate you. There's nothing to debate about. There's nothing to debate about. It's inflation. I don't need to debate you. There's $74 trillion of debt in the system. Look at the curve. From 1980, the blue line goes up, the blue line goes up, the blue line goes up, the blue line goes up. The system is broken. It's broken. I don't have to sit up here and debate you. What you need to show me is, why does the debt keep going up? You know why? Because of inflation. This has been going on. You can go back to the Roman Empire. We've watched this happen to the Roman Empire. Governments will always debase their currency, and it always ends in collapse. It will always end in collapse. We've watched this happen time and time again. I don't have to debate this. I have history on my side. I could give you a better one. I could pull up a better chart for you. This is where the blockchain comes into play. This is where Bitcoin comes into play because they're outside of the traditional banking system. Right? When you look at the value proposition of Bitcoin, what Bitcoin is saying to you is that it allows you to get out of the traditional banking system. And it's trying to mimic hard money like gold and silver is what it's trying to mimic. Again, it's speculative. You're dealing with an asset that has a market cap of $157 billion. Right? You're dealing with the asset that's $157 billion. I'm not even going to debate you what the tax rate has nothing to do with that. We're talking about the system. See, this what JB is doing right now is one of the biggest deflections that you constantly see these people do. The tax rate has nothing to do with the system. The system is broken. You cannot print money out of thin air. It will not work. It will not work. I don't care how many times you go, it will not work. When you print money out of thin air, you create a boom and bust cycle. We can watch this over and over and over again. Taxes will not stop the boom and bust cycle. It won't. We have $23 trillion of national debt. It's not going to fix anything. The system is broken. Now, back to what I was saying. When you look at Bitcoin, right? The market cap is only $157 billion. Guys, that is tiny. This is a global asset. Compare that to the gold market cap globally. Gold has an $8 trillion market cap. It's way bigger than the Bitcoin market. Bitcoin's only 11 years old, right? We have time for it to grow and turn into something. Now, is it speculative? Yes. I highlighted the other day. Are you going to see booms and busts? Yes. Can it be manipulated as far as price is concerned? Absolutely. Right? But at a certain point, you have to be able to, think a little bit further. You're not investing. It's not even just Bitcoin, right? Think about Ethereum. Think about nulls. Think about waves. Think about Atom. Think about Tezos. Think about 0x. All of these different protocols. We don't know which one is going to be successful. You don't know. I don't know. None of us truly knows, right? We're investing in the idea of what it may be, right? Bitcoin is an entire ecosystem. It's based upon incentives, right? It's decentralized. It's trying to try something different. When you look at central banking, you're dealing with a centralized form of money. So the people don't have any real say as to what happens with their money. You have 12 guys who get in a room and they decide your fate. They decide how much your mortgage is going to be, how much your car loan interest is going to be, right? They basically are picking winners and losers. And let's just be honest, most of the time we're on the losing end. And that's just the reality. It doesn't work well for everyday Americans. Income inequality wouldn't be where it's at. It wouldn't be where it's at. So now, Jay, this is not capitalism. This is not capitalism. So if you believe that this is capitalism, God bless you. This is not capitalism. Capitalism is not bailing out banks. Capitalism isn't doing QE and giving interest-free money to banks to go speculate on assets. That's not capitalism at all. Capitalism is about competition. Capitalism isn't about creating regulations to lock out small people and kill competition. That's not capitalism. Capitalism is about competing. You want to hear what John D. Rockefeller had to say? Let me show you what your good old capitalist had to say. Competition is a sin. I want to pull up his quote. I want to pull up his quote real quick. I can't get to my keyboard because my iPad's blocking me. This is what John D. Rockefeller had to say. John D. Rockefeller once professed competition is a sin. They don't believe in competing. They don't believe in competition. They believe in rigging markets. And if you believe that this is capitalism, if you believe that this is about people competing, has nothing to do with competing at all. Number one, guys, Bitcoin's success is not about the price growing. I think a lot of people miss what Bitcoin is about right now. Bitcoin works. It serves different functions for different people. When I say buying Bitcoin, that means being outside. For me, I want to be outside of the traditional banking system because I can see the leverage and the problems in the banking system. Right? So when I see the problems and the instability that we have in our economy, and I want to speculate, right? I want to speculate on things that I believe are going to do well in a bear market. I believe, based upon the way Bitcoin is designed, because it's deflationary in nature, that we're going to see $100,000 Bitcoin. We're going to see $200,000 Bitcoin. I believe that the government's going to continue to keep printing money, right? So when I look at an investment from a speculator, remember, I'm speculating on the price. I'm saying that the market cap's only $157 billion. And if Bitcoin can capture 10% of the gold market or 10% of the mutual funds and pension funds, once the infrastructure is built, what does that do to the price of Bitcoin? Now, as far as the technology, the decentralization aspect of it, there's some people who they need to get away from their government. If you're in Venezuela and you have a government that's restricting your access to banking, and you're having 10 million% inflation, you need a different money. Right? You don't have to speculate on the price of Bitcoin. If you want to transact, right? Remember, Bitcoin is borderless, it's permissionless. You don't need an ID. You know, in certain parts of the world, if you're part of a certain religious group or an organization, if you look a certain type of way, you can't even get a bank account. With Bitcoin, you don't need to do that. All you need is a wallet. You download a wallet and now you have a bank account. So it has different purposes for different people. If you're in Hong Kong and your government is shutting down your bank account because you're protesting, all you can do is download a Bitcoin wallet and you can transact and send value to people. So it has different purposes for different people. Right? Different purposes for different people. Now, someone said you don't have to go off the grid. There are some people who are off the grid. There are certain parts of the world where people don't have banks. They don't have banking. Like there's certain parts of Africa where people don't have a bank account. They're already off the grid. They don't count. So how do you bank? How do you transact digitally? You can do that through Bitcoin or Ethereum or Tether. There's other cryptocurrencies. So some people use it as a medium of exchange because that's all they have to do. Like if the Turkish lira, if you're in Turkey and you have an oppressive government, if you're in Saudi Arabia and you can't get a bank account because your government says you can't have a bank account, what do you do? Just block a few people. See, you got to think about it. If you're in Zimbabwe and you're having hyperinflation and you need something stable, you can do crypto. You have control now of your banking outside of the banking system. Think about it right now. If I wanted to send $100,000 to someone in Australia, I would have to go sit in a bank during banking hours, fill out a bunch of forms, explain to them why I want to access my money, and then send it to the person. With Bitcoin, all I need is a person's address and I can send it immediately. Right? Bitcoin was born, and somebody just said, I'm glad you said, after the 2008 crisis, to give people an alternative to protect their money outside of the control of inflation. Right? There will never be more than 21 million Bitcoin. We know that. So we know we have a fixed amount of Bitcoin in existence. There is no native currency for the internet. And that's what Jack Dorsey was saying that he's trying to get Bitcoin to become. It's backed by math. It's backed by computer science. That's the backing. It's open source. It's decentralized. That's the backing. The network backs the network. The technology backs it up. The coding backs it up. The math backs it up. Isn't China like all cashless? Yeah, but it's a communist country. They can spy on all of your transactions. So it's just different. But let's see what's going on. Someone gave a donation. Alexander Wilson, I brought Bitcoin at its all-time high in 2017, and I'm still holding so I can get back to break even. Don't do FOMO. Good video, though. Yeah, Alexander Wilson. See, that goes back to dollar cost average, though, right? Give me 1 second. I want to show you something, right? I want to show you something, Alexander Wilson. I spoke about this the other day. Right? It's something known as dollar cost averaging. When I'm investing, right, and I'm investing in something that I believe in, I'm not investing all my money at one time. Like today, these are days where I buy, right? Because I believe in this asset long term. So if I buy one unit at 10 and the market crashes 50%, and I buy one unit at 5, that gives me a total of 15, right? This is called dollar cost averaging. And you could go look this up and educate yourself on this. And I divide it by 2. Now my entry price is 7.5 rather than being in at 10. So I can reduce my entry price rather than being down 50% by dollar cost averaging and buying more. You have to understand, like, I've been involved in Bitcoin going back to 2011. If you go back to my channel, I made my first video on this channel on Bitcoin back in April of 2019. So I've doubled from the first pump we had. If you go back here on the chart, and if you don't, listen, guys, one thing about me, I don't lie. I speak what I actually do. I made a video about Minister Jap. Let me flip it over. I keep doing this. I'm sorry, guys. I keep doing this. I made a video about Minister Jap and Bitcoin back in 2019 in April. Bitcoin went from 5,000 all the way up to 14. Right? From a speculation standpoint, I doubled my money. But I believe that I believe in holding this technology long term. Right? I don't believe in selling this anytime soon. So I held. So when it comes down here to 7,000, I didn't get scared. I buy more. I've been involved in Bitcoin back when it was in the single digits. Now, you're going to make more money in these smaller coins. You're going to make more money in Ethereum if you're speculating, right? We're not talking about using the technology. For people who use the technology, you can use Bitcoin today. If you want to transact over the internet without a third party, you can do so with Bitcoin. Outside of the financial system, the technology works, right? If you are an investor and you're speculating, see, this is different. Speculating. That means you're hoping that the price goes up. Ethereum's going to pump harder than Bitcoin. Why? Because the market cap is smaller. So it takes less money to move the price. Like look at Tron, right? Or look at Cardano. Cardano has a $1 billion market cap. So for Cardano to go from basically 5 cents, if you round this, from 5 to 10 cents only takes another $1 billion. So $1 billion more can pump this and you can double your money. Bitcoin is going to take a whole nother $157 billion to get to 16,000. So it takes more money to move the price. So if you're just a speculator, then you have all of these other coins you want to speculate in, if that's what you want to do. Remember, I'm investing for a 3 to 5 year time period. I don't care about the day-to-day fluctuations of price. I'm not one of these people who every day, like gold, it came down today. Guess what I'm going to do? 50% of my savings is in gold. 50% of my savings is in cash. That's it. I park my savings in gold and silver, 50%, and I put 50% into cash. That's it. That's it. It's not complicated. You don't have to come up with some formula. You don't have to have a PhD in economics and finance. Simple. The government's telling me my money's going to lose 3% a year on average. You don't have to be an economist to figure this out. Look at the chart. 4%, 3%, 6%, 11%. Look at the Excel spreadsheet. Every year, inflation is 3%, 4%, 3%, 4%, 10%. We see that. It's not complicated. You're losing. If you put your money in a bank account, you're losing money. So I put 50% of my savings in cash, 50% of my savings in precious metals. That's my savings. Not complicated. You can do 60-40. You can do 70-30. You could put 70% of your savings in cash, 30% of your savings into precious metals. That's all. You don't have to overcomplicate this. It's called being diversified. One of your favorite investors who always quote Warren Buffett, he talks about diversification all the time. Cash is a good position sometimes, right? Sometimes being in cash is a good position. Not saying it's bad, right? But there's just different methodologies, right? I'm speculating when it comes to gold and silver. For me, is an insurance policy. It's a savings account. Bitcoin is speculative for me. I'm speculating purely on the price. Purely. I'm purely speculating on the price. When I invest in real estate, I'm only looking to get cash flow. I'm looking to get cash flow and hopefully get some appreciation. So my real estate strategy is very simple. I want to be in places where I see stable job growth. I want to be in places that are near decent neighborhoods, and I want to be in multifamily. And I want to use the tenant to pay down the debt, right? There's good debt and there's bad debt. There's debt that pays you and there's debt that charges you interest, right? I want to use debt to accumulate and build wealth. And I use the tenant in the property, paying rent to pay down my mortgage. And then I refi, take the equity out, and I look to get another property. Not complicated. Don't need a PhD. Don't have to be, you don't have to be one of these, gurus when it comes to real estate. That's it. When it comes to stocks, I want to be in precious metals, mining stocks that pay me dividends. That's what I like to do. Now, I'll speculate in, like a Facebook, or Qualcomm, stocks like that. But for the most part, those assets are going to make you more money than gold and silver ever could. Gold and silver is not an investment as far as making money. Gold and silver is a hedge against inflation. Gold and silver is an insurance policy against inflation. You speculate and make money in stocks. You speculate and make money in real estate. You speculate and make money in crypto. I don't buy real estate nowhere in New York. The person Michael Clark said, I don't buy real estate. The taxes in New York are too high. The taxes are way too high in New York to be buying real estate. The Spear said money is a means of communication, a tool, if you will. 100%. It's a language. The problem is that, think about it, guys. If I work and I trade my most valuable time, my most valuable asset, which is time, my most valuable resource, which is time. If I trade that, I need to get paid in something that is valuable. Right? If I work 40 hours a week and you pay me in a piece of paper that you're telling me is going to lose at minimum 3% every year, that's not good. That's not good for me. If I make $50,000 a year and I save it, I want my $50,000 to be able to buy the same stuff it can buy today 5 years from now. Your government is telling you they want inflation. You can't get around this. Like I said, you don't have to be, an economist to see this, that this is the problem. When you look at the system, this is debt. Look at this debt, $74 trillion of debt in the system. Debt is money. You borrow money into existence. For now, I'm going to stick to REITs until I leave New York. Yeah, I've never invested in REITs. I wouldn't know anything about that. I would be lying to you if I said I knew anything about it. I don't know anything about Oh, Mark J, don't forget I want to make a bet with you, Mark J. Mark J, don't forget the comment. I want to make a friendly bet with you. What do you think is going to be a good bet as far as the price of Bitcoin? Let's make a friendly bet. I'll send you $100 in Bitcoin, Mark J. If let's think of a good bet. Let's bet $100 of Let's bet $100 of BTC. Let's come up with a good bet. Let's see what else is going on here. Come up with a good bet about the price of Bitcoin, and I'll bet you 100 BTC. I'm betting that the price goes up. I guess you're betting that the price goes down. So let's pick a price that will get hit first. That'll be a good bet. And there's 163 of you guys watching this. Please hit the like button. Money is not fake. Transaction from banks make money made up. I don't sell Bitcoin. Yeah, I'm just betting Bitcoin. Yeah, I've never touched a REIT in my life. I don't really even know how they work. I've never invested in it. I've never touched them, so I couldn't speak on that at all. Debt is only money if it can be collected. Otherwise, it's unfunded liability. I like that too. I like that, Malik. That's true too. That is true. There's ways you can use debt and not pay it back. So I like that one. Malik Immaculate. That's a good one. I like that. I'm going to use that one. Malik Immaculate. I'm definitely going to use that one. I'm trying to be respectful to you, fam. Stop telling me what I do and don't know. I agree to disagree with you. Let's keep it civil, brother. I don't do opinions. I do facts. Okay. Mark J, where you at, man? I want to make a bet with you, man. Let's bet on the price of Bitcoin. BTC got 80. Let's bet on you said Bitcoin's going to crash. Let's make $100 bet. $100 in Bitcoin, Mark J. Where you at? Where you go, Mark J? How's it going, Realist Talk? Where's Mark J at? Where you go? Where you go, Mark J? Let's make that bet. $100 in Bitcoin. $100 in BTC. Let's make that bet. Let's make that bet. You said Bitcoin's going to crash. Where do you think it's going to crash to, Mark J? What I have said is holding true. As you have seen, BTC tried to rally was a couple of times the last few days, and I feel like other assets except treasuries. Yeah, a lot of money did pour into treasuries. You're right about that. I agree with you about that. But I'm saying, if you think it's going to crash, let's make a bet. Like, you think it's going to crash to 5,000? You think it's going to crash to 4,000? Right? Because I'm going to bet that the price is going to go up. So I'll bet that Bitcoin is going to hit 15K before. Okay, I'm gonna bet that Bitcoin's going to hit 12K before it hits 5K. So I'm betting that Bitcoin's going to hit 12K, and you're going to bet that Bitcoin's going to hit 5K. Guys, I don't know what's going to decrease. I just know that I'm buying more. That's all I know, is I'm going to buy more. Oh, well, yeah. I mean, none of us know. I thought you meant like it's going to crash like 5K, 6K. I wanted to make a bet with you, Mark J. I wanted to bet some BTC. Man. Also, a lot of you guys, you've been reaching out to me and asking me questions about the about crypto and doing like more in-depth stuff. And I'm in a process, like I said, I'm playing with the Keynote, and I'm playing with animation software. So I'm trying to really like learn how to make animated videos, because I really think that that would be much better for a lot of you guys to learn. And it's not enough time in the day, guys. I'm going to be honest with you. It's hard to run my business, deal with my clients, research stuff for videos, respond to you guys in my inbox or the people who hit me up through DM, and then put together videos, learn how to do Photoshop, learn how to use Keynote. It's a lot of stuff. So it's a process, and I'm still trying to think, like, should I do a Patreon? Should I do a membership site? So it's a lot of stuff to do for one person. It's a lot of stuff to do for one person. So that's where I've been at right now, where I'm just like, it's a lot of stuff to do. Like, I have a lot of appreciation for people who create content, people who do like YouTube videos and stuff like that. I used to think that it was easy just to get up here and talk. It's not easy to sit up here and speak, because sometimes you're going to make mistakes. You may get something wrong. So it's a lot. I basically manage money. I invest money, but I do it more in a day trading fashion. But the problem with day trading is you get to the point where you have too much money and you can't allocate it, because day trading is about being small and getting in and out, and you can't really day trade once you start getting so big. So it's limitations to it. It becomes limitations to it. So it's like it gets to the point where it's just not, you for the amount of risk you're taking, you're not getting the same return. So I'm looking for like more things to do, like get into, and that's why I'm getting into Bitcoin and getting into gold and silver, and I'm getting in because there's enough liquidity for me to get in there, with a $500,000 position, $250,000 position, and lever it up, and know that I can be able to get in that position and hold it for a much longer time period, because I'm looking to make more money. So I'm looking to lever up big. Like day trading, you're trading with like 2 times leverage, 3 times leverage, right? Like when you're investing, I'm trying to lever up like 50 to 1. So for every dollar I put in, I want to lever up for 50, right? So, I really want to leverage myself. So that's what I'm looking at. Like, if you put $250,000 in the market and you lever that up times 50, I'm controlling over $12 million of an asset. So that's what I'm trying to like that. Well, that's what I'm basically doing now. Like, I'm allocating big amounts of money into different crypto projects, because I believe that that's just where that's where I feel like I can get the best bang for my buck. I mean, like when you look at like a project like Tezos, I've more than 4x my money in Tezos. Right. So like that's what I'm looking to do, like really like lever up big. And that's why I'm holding things for like a 3 to 5 year time period, because you know if Bitcoin hits 100K, you know, you're probably not going to see me make any more videos. You're probably not going to see me make any more videos. If Bitcoin hits $100,000, man, you won't see me up here. I'll start making videos because I'm gonna be a really, really, really rich man. So that's why, like I said, I don't like having to sit in front of my computer all day long and being stuck in front of my computer. Like, day trading is not as good as people make it seem. I really enjoy researching. I really enjoy making these videos and stuff like that. So I have collateral behind my positions, so I can lever up big like that because I have that type of collateral behind the positions that I'm taking. So like I'll lever up 15 to 1, 20 to 1, and things like Bitcoin that's more stable, I'll go like 50 to 1. And I do it obviously through different mediums. I'm not just doing it through pure, you know, I do it through the futures market, I do it through actually the physical crypto, I do it through options. Like there's different ways, you know. But I don't really know too much about Bitcoin IRAs, to be quite honest with you, Despair. I would have to look into that. And that's the thing about, this is what's so fascinating about the technology. Like, this is what's so fascinating about investing. Like, there's so many markets and so many new things. Thank you for the donation, Realist Talk. There's so much with Bitcoin and crypto. That's why I try to tell you guys, there's so much opportunity from the development side, from the business side, from the broker side, from the education side. There's not a lot of people involved in crypto. There's just not a lot of people. And there's so much stuff to learn about mining, about distributive systems, you know, about new blockchains, new projects popping up, you know, like there's so much just opportunity and things to learn, you know, about different blockchains and, you know, different ways that people do different hashing algorithms. I mean, it's just like, there's just a wealth of information that you can learn, man. It's like, yo, it's so much. Like I start trying to put together like a course on Bitcoin. It's so much to learn, man. It's so much to learn. Teaching people about Austrian economics and Keynesian economics and game theory and, you know, SHA-256 and ECDSA and talking about quantum computing and qubits and digital signatures and cryptography. Guys, I can go on for days. Like there's so much you can learn, man. There's so much that like it's a wealth. Like I learn new stuff about cryptocurrencies every day. Like I finally start like looking into Tether and who's behind Tether. And guys, this is a rapidly evolving and growing industry. This is where you want to be. This is where you want to be. It depends what you're using Coinbase for, Alexander Wilson. It depends what you're using Coinbase for. I would not leave my Bitcoin sitting on Coinbase. I can tell you that much. Man, I'm going to make a video and tell you about how much Bitcoin I lost on Mt. Gox. You'll cry. Coinbase is for people who are just getting started, like the guy Despair just said. I like using local Bitcoins, mining the Bitcoin myself, using certain Bitcoin ATMs where you don't have to identify who you are. I mean, this is, guys, there's a lot of opportunity, but Coinbase is good to start out. Just don't leave your crypto sitting there. Not your keys, not your Bitcoin. Across the board. And I know I keep saying this, but as financially, like as y'all support more and y'all donate, and I'm not saying this just to get donations, it frees up my time. Because if I know that I can make money from doing this, I don't have to focus so much on my business and clients and all that kind of stuff. I can focus more on research and putting together content and even being able to, you know, like hire an assistant and have someone work with me and help me make thumbnails and help me do ad copy and help me build the membership site. Like I really want to do that, like hire someone that can actually work with me, because guys, there's so much opportunity. I swear to you, I lie to you not. This industry is going, you're looking at the internet 2.0. Like you're looking at the future. The future is in front of you right now. Centralized systems will no longer exist in the next 10 to 15 years. Everything is going to be decentralized in some shape, form, or fashion. Everything. A nondescript says, I have a friend that created a computer game where you use Ethereum and you can gain them. I'll post the link in the comments when I find it. Yeah, guys, there's people they're creating, casinos on top of the blockchain. People are talking about putting medical records on top of a blockchain. People are talking about decentralizing healthcare, decentralizing title companies, and decentralizing, the way finance is done. When you start thinking about how, once you really understand the need for decentralization and how decentralization can solve so many of the problems that we're facing as a country, as we're facing as a people, as we're facing as a nation, it's like there's just so much opportunity, just out here. It's just like it's ridiculous once you start thinking about it, and that's why I shifted away from a lot of that Umar Johnson stuff and all that, because I just realized there's so many better things that I could be doing out here, and if I could. I don't claim to be an expert. I'm knowledgeable. I have my money invested in this stuff. I spend at least 3-4 hours a day researching this stuff. But guys, even this industry is growing so fast that there's no way you're going to learn everything about every crypto project. Like, I just learned something new about Ethereum the other day. It's just like literally. But Bitcoin IRAs, I have to do a video for Real Talk. And I'll look into Bitcoin IRAs for you, Despair. I don't know too much about it. Someone posted. No, it was Alexander Wilson, I think. Who posted Bitcoin IRAs? Was it who posted? Let me go through the chat. Somebody posted about a Bitcoin IRA. Boom, 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 boom. Who posted the Bitcoin IRA? I can't even see. The chat's moving so fast. Money is not fake. Somebody posted the Bitcoin IRA. Yeah, the Spear. You have my word. I'll look into it. The same way I have to make a video for Real Talk. I'll look into the Bitcoin IRAs. I don't know too much about it. That's why one thing about me, I'll never sit up here and try to pretend like I know something. If I don't know it, I'll just simply say I don't know. But let me write this down to my notes. Bitcoin IRAs, and I'll look into it and see if it's even a thing that exists. I don't even know. I'll look into it. I don't know too much about that. And I got to make the video for Real Talk. He made a donation the other day. So. Now, I was learning about the whole the decentralized finance aspect of it, about how they're really trying to take apart the financial industry and setting up loans into smart contracts in the way that you can use different signatures. It's so much, guys. I'm learning about Snore and Taproot. Those is going to be a new signature scheme for Bitcoin. So it's so much. It's so many. This industry is developing so fast. It's like every day there's 10, 15 different stories and stuff like that. So, the whole decentralized finance is going to be big with DeFi. So it's just a lot, guys. He's a black comic graphic novelist. Have you tried Fundrise? They're going public soon. I know a few people who've tried Fundrise. It's actually good. I know someone personally who's been making good money on Fundrise. So I know that Umar has a new office in his car or SUV. So like I said, what I'm going to start doing, guys, is I'm going to start doing a weekly show like this. I really think that this is going to be good for me and my public speaking, for my development. And I think it's going to be good for you guys to learn as well. We can learn together, because as I said, there's so much stuff. Like even in Bitcoin SV, it's a garbage coin, but I mean, there's just so much happening there as well. So with that being said, though, I'm going to leave the video here, guys. Thank you. Oh, so hold on. What do you recommend for a new person to store Bitcoin if one wants to hold it for a while? Yeah, like the Spirit said, get a Ledger Nano. I have a video about it. I plan on, again, I got a lot of videos I have to do. I just don't have enough time to do them all. But I'm going to end the video here, guys. Thank you for tuning in. It's a Friday night. I'm gonna go outside and enjoy my Friday a little bit. It's 10 o'clock at night. Please like this video, share this video, subscribe and hit the notification bell, drop a comment below. If you want to ask me any questions, you can DM me on Instagram, just add me. If you want to support the stream financially, you can hit that PayPal. That would definitely help, and you can watch it back. With that being said, though, guys, I'll probably my next live stream will probably be Monday. So spend this weekend doing some more research and stuff like that. And if you find any inconsistencies in anything that I've said or any mistakes, guys, feel free to correct me. One thing about me, I don't claim to be some know-it-all. So have a great and blessed and beautiful evening, guys. Good night.